Welcome to this episode of Money Conversations with Everyday People. I'm your host, Rikayat Kolawole, and here today with Isioma Asiudu Otugwo. Isioma is the head of network at Learning Career Mom, dedicated to women's advancement and inclusive workplaces since 2014. As co-founder of Blazers and Baby, she supports working mothers through peer circles. She is a board advisor for Learning Equity and Sustainability Network and a pioneer for Learning Global Network Growth. Recognized by SPE African Oil Week and Sheryl Sandberg for her inclusive efforts, she contributed to Learning's Working Mothers curriculum with Stanford University. Isioma volunteers on boards focused on inclusion, energy, innovation, and sustainability. She hosts the podcast Walk Talk and previously hosted Life Work with Blazers and Baby. A sought-after speaker on leadership, talents, energy, and change, she's been honored by the energy industry. Currently a senior advisor in a top energy firm, Isioma holds engineering degrees from the University of Benin in Nigeria and Oxford in the UK, and a certificate in engineering business management in Warwick University. She resides and works in Doha, Qatar. Isioma, thank you so much for joining me today and sharing your experience. For our listeners, Isioma is an everyday individual who decided to embark on the path of building her financial future through investing. So, welcome,
Thank you
Isioma.
very much, Rukayat. Thanks for the nice introduction and for this amazing podcast and the work you do. I think the conversations are necessary. I'm privileged to be here. I'd like to just share my journey as a, I think, intermediate journey. Um, yes, after studying engineering in school and I have a certificate in business economics from Oxford, and then I did an engineering business management diploma from University of Warwick. You'll be surprised that investment and money is still required a different learning path. So now we'll talk about that during this conversation. Yeah.
Definitely. Thank you, Isioma. And can you take us back to the point when you first started thinking about investing, like seriously? What were some of the thoughts and motivations that were on your mind?
Um, so two things I would say. I would start with first, I think I'm privileged to have seen my parents investing and especially investing in stock, but I never took it serious. So as a child, I think I bought just few stocks here and there that were quite, I think, negligible. But in my adult life, I think my serious investment conversation, I think started in 2010. I think I saw a post by someone like financial advisor in Nigeria, and I did a financial audit with her. And that's when I saw some missed opportunities. So I was just taking easy investment option, but I was not a conscious investor. So I started in, I think, effectively 2017, seriously.
Mm. That's really good that at least you started some years back. So when you started, right, what were or even before you started, what were some of your initial perception or maybe even hesitations about investing before you started exploring it more seriously?
I think that I thought what I was doing was enough, honestly. Oh, you want to buy a house, so work towards buying a house. You're doing some savings with your company. I just thought it was enough, but I had not like looked at it in terms of the numbers and what it really, if it really was enough. So it was
Mhm.
just that financial audit, checking the outflow, inflow, and then even looking forward to what good looks like. So I was also taking debt without really thinking about if the debt is an asset or liability. So I was just like an everyday person. I was not budgeting seriously. So I think that was my wake up call. And I think that was my first serious step in investment, that I really now reevaluated my choices, adjusted my ways of living, set some short term and long term targets. That was the first time I did that. Yeah, before I
Mhm.
think I met you 2 or 3 years ago and I did another one. Yeah.
Okay. Yeah, that's really good. So what would you say were some of the biggest questions or concerns that you had when it came to the world of investing?
I had some questions. But I want to just check.
Mm.
I'm hearing it very loud. So
So, what was the key moment or catalyst that kind of made you decide, okay, now is the time for me to start investing?
I started having children, right? I had two kids, and I was thinking to myself, when they're grown up, how am I sure that they would have, I would be able to fund their lives? One. Number two, I was looking at what was happening in the workplace, became more volatile, more unpredictable, no long-term security. So I wanted to make sure I was maximizing my income while I was young in terms of the use of my income. And I liked the notion of making your money work for you while you're sleeping. So that was a good motivation. So I said, let me give it a try and get some education to help me towards that. Yeah.
Yeah, that is really good. So you kind of mentioned a key motivating aspect of it, but then what were some of the biggest questions or concerns that you really had about the world of investing, if any?
So there were, of course, a lot of things going around. I had made some mistakes. Just someone saying, "Oh, this is a good idea," or "I made money from it," and putting my money. I thought it was a bit complex. I didn't know which investments were high risk, what was low risk, how to make a good investment beyond just buying and selling and having like a profit on top of it. How to work with the financial market, or even how the financial market work. What drives the value of a share price? What does a high yield dividend? What does that mean? Should I do this versus startup? All those kind of questions were in my head, venture capital, or just, give your money to someone and let them make the decisions. Yeah.
Hmm. And I think this goes back into you actually doing the initial research, right? And this goes into when we what we call financial education and also just helping you to understand the basics of financial literacy. So what were some of the resources that you used and that you came across in order to help you kind of understand what is going on within the investing landscape?
So first, I subscribed to an investment group, right, where at least for the Nigerian Stock Exchange, they were sharing analysis. Then took keen interest in reading the analysis and trying to understand the language. Um, um, 3 years ago, I think I got in touch with you at PaceUp, and then you shared also some good resources, some good educational resources about risk and global markets beyond Nigerian stock exchange market, and did some education piece there. And most importantly, I think the budgeting app, I had a budgeting app, Reach. I don't use it anymore, but that helped me monitor my inflow, outflow, and help me with like my monthly analysis of where my money is going, reading my text messages to determine where my money was going. Yeah.
Mm. Well, that's really good that you're able to kind of use a budgeting tool because I always say that you have to budget to understand what your, like you said, your inflow, your outflow, and then what is the buffer at the end of that you can really start investing into. But then when you started, were there, because a lot of people get so confused about investment concepts. So were there any specific investment concepts or terms that you found confusing at first? And how did you work to really understand them better, right? So to remove all the jargons, because investing, finance, so many jargons. So how did you kind of work to really understand them better for your own comprehension?
I think our generation is a bit lucky because there are a lot of financial advisors now putting explainer videos on YouTube, right? I also follow Dave Ramsey, you know. Um, a concept that I did not quite understand was the concept around average costs in terms of share purchasing, right? Where you're not looking at is the price high today, low tomorrow. You just have a consistent amount you're putting to. I didn't really understand how that, how that worked. I was always looking for, oh, when the share price is low, then I'll buy. And then I got introduced to that. Okay, just buy anyway because it's a long-term hold. I found that that was a good one. And the retirement planning, I think that was something that was really powerful. Like what you want to, I didn't really understand how to plan for retirement. What's the basis, and inflation rate? How do you consider that, 30 years from now? net present value. I understood net present value, but I did not understand the implication of inflation rate and interest rates on my retirement plan.
So do you now understand them now? So for example, the dollar cost averaging, which is the first one that you mentioned, that you didn't really understand that, but now do you understand it now and why it's really important to kind of do that? Because on average, you tend to reduce your cost on the long term, and also kind of increase your return in the certain investments, and making sure you're not selling when the price is too low and buying when the price is too high. So are all this basically now, do you now understand them when it comes to the dollar cost average, but also when it comes to really planning for your retirement? And have you taken a step to actually start looking into that as well?
Honestly, these things, you think you understand them, the application is now the challenge, right? The discipline and the accountability to yourself to apply them. I know that after understanding, I think, seriously looking, applied them for like a year, and all of a sudden you just like, oh, whatever. So or sometimes you fall off the bandwagon, I would say. Sometimes you fall off the bandwagon, especially if you don't put like a standing debit or on your account. But I would say like that understanding is there. Is the discipline towards application. For me, I find it challenging, especially when you change accounts, change cards. Maybe when you've started investing already and you put standing instructions, then you change your cards and then you lose that discipline again.
Okay, so there comes the challenge of finding something that will remind you of, okay, you've changed your card. Now you need to kind of stay disciplined when it comes to really following through on the investing, and when you're doing the dollar cost average, basically. So hopefully there's someone out there that has that has an idea on how to ensure that people kind of, when cards change or when bank accounts change, there is sort of like an alert that helps you to be able to say, okay, now I'm moving account. How does this apply to, how does this help me to continue to have a seamless experience, and just ensuring that I also stay committed to that. And this also comes into when we talk about managing emotions, right? Because this also goes into managing emotions as well. So let's go back to making your very first investment. What was it? What was the experience like for you emotionally?
So I felt proud of myself. And that's because all investments I've made, uh, I have got some advisory before investment, right? But I still feel like I am a conservative person, because despite the advice, I still go tentative. I actually go small and average out. That's another interesting thing, phenomenon around me. Even if people say, "Oh, you can take more risk," I always go like moderate with my risk by diversifying my portfolio, diversifying the industries I invest in. I think that's also something I learned, and it was further amplified when I looked into some Fortune 500 companies and how they invest. I looked into their financial accounts, and I saw that they don't put all their money back into their business, that they also invest in other businesses and in other industries. So I found that diversifying my portfolio was very important. So I'm still risky in some ways, especially with VC, but
So you touched upon diversification. What is your understanding of what kind of diversification did you do? So you mentioned you looked into some of the Fortune 500 companies, and they were also kind of diversifying their own investments and whatnot. So what kind of diversification do you currently do, so that you also kind of help our listeners to kind of understand the different kinds of diversification and how it has really helped you when it comes to perhaps part of emotions as well, but also when it comes to your strategy.
you're reminding me that I need to update my strategy, but I will just share a few just it's some experience and even a review I did. I did some investment about 6 years ago. Was that 2019? I did some investment, and then I would say I was still, trying around in my investment, and I noticed that then I had diversified across cement, FCMG. Cement is for infrastructure. FCMG is fast moving consumer goods. and banking. And then I looked at some policies, and I understood that, oh, palm oil is something that is used in a lot of consumer products, is used in a lot of manufacturing, and I decided to invest in palm oil. Now, 7 years later, I did a review. 6 years later, I did a review of that portfolio. The palm oil investment gave 500% above, compared to the others. That's it. So that's diversifying around sectors. There's also diversifying around the type of investment. Like maybe some people invest in like gold for hedge funds, or some people buy gold literally, and then energy fund, and then utility fund, and some like post office or Disney, Netflix. You look at them; they're all in different parts of the economy. And some you can also diversify across geographies. Invest in American stocks, Nigerian stocks, UK or Asian stocks. So those are some of the ways I've learned around diversifying.
Super. That's really, it gladdens me to hear that, because I always inform my clients, and when I create a strategy and portfolio for them as well. So it's really like the asset classes. So when you start talking about gold and all that, so different asset classes, so stocks, bonds, real estate, infrastructure, even alternative investments like venture capital, or even business angel as well, but not only in one country, because we call that home buyers, right? When we just invest in the country that we live in, but we look at other countries. So, for example, US, for example, the UK, Europe, India, right? Japan, emerging markets. It's really important to have an overview of different regions as well. I did a webinar recently where I talked about how the different asset classes really performed during the tariff period when US stocks were like really going down. We saw UK stocks like rising, European stocks as well. And also when it comes to gold, silver, and even some agricultural products. So like you mentioned with your investments in palm oil. So it's really, really important for our listeners to understand that there can be different asset class diversification, but also it's really important when it comes to diversifying across different geographies as well. And the last point is when it comes to time. So the time one is a dollar cost average that you're struggling with. So hopefully we'll be able to discuss that later on how to really help people that just struggling with the dollar cost averaging and having the dedicated discipline to go through that, because it's really, really important, and it helps the portfolio to kind of minimize the risk on a long-term basis. So now let's go to the feeling of addressing risk, right? So how do you feel about the idea that your value of your investments could potentially go up and down over time? So you've been investing for like 9 years now, so between 6 to 9 years. What are your feelings around up and down on when it comes to investing, and also addressing the risk management aspects of your investing?
I think it's normal, right? I think every day you wake up, there's a risk that something would happen. So I'm a long-term investor. When I invest in anything, I hardly look at it every day or every month. As you said, the portfolio evaluation I did now is after 6 years. I think the last time I did it was actually after almost 8 years. I think that is, yeah, after 8 years. The last time I looked at it was about 4 years ago. So that's my approach to things. It's real estate, I think, in Nigeria that you see it goes up. I'm not so exposed now to real estate in Nigeria, but I'm a long-term investor because I really, really want to look forward to have a comfortable life, the while enjoying now. And that's why even as at my how much I invest, in proportion to what I spend now, I think it's different. It's a bit smaller because I still want to enjoy my life now, but I want to live a decent life later on. But so I believe my risk management is quite balanced. I'm okay with it going down, and that's the power of diversification. Is when everything goes down, then it's a problem. So if banking goes down, Bank of America goes down today, but Disney is up, right? So that's how I balance out that risk, that fear. So I'm not overly exposed only in one type of asset class. I'm also not overly exposed in any specific region. So there's always something in another region that I can lean on if everything fails in one region. Yeah.
I like it that you said you're focusing on long term, which is really, really important because when it comes to wealth building, we have to focus on long-term investing to be able to build wealth. And you've kind of mentioned something when it comes to like your goals, which is what I took out from there is your goal is when it comes to retirement to still be able to enjoy the life as well. And I also picked up on something that is very behavioral in what you just mentioned, that you're not spending too much, but investing as well. So this is what we call the saving consumption balance. So I see that you have an understanding of your consumption relative to your savings, meaning the savings then that you can ultimately invest, right? And this will actually help a lot of our listeners as well to kind of think back, okay, what is the ratio of the consumption to saving, when, and then how does it impact when we talk about investing and long-term building, and ultimately when it comes to retirement planning, because it's really, really important that no matter where we are in our point in life, right? In those of us that were working, so in the working adult life, the age to start thinking about retirement as soon as possible, right? Most people think, okay, when I get to my 40s, that's when I'm going to look into my retirement. But no, as soon as you start working, you start planning towards that, because in most parts of the world, most countries don't even have a retirement. They don't have how do I say, a state pension plan. But those that actually have it, it is not sustainable. So we have to take the control of our finances into our hands. So thank you for mentioning that part, which was really, really cool. And you kind of wove it in nicely to what I would like to ask next, which is what kind of mindset or perspective really helped you to stay focused on your long-term financial goals, especially where you encounter any market fluctuations?
I think one thing I wanted to add, another investment class is myself. Myself and my creativity and talent. I think that's why I'm moving towards. I'm 38 now. Um, by next year I will be 40, and so the asset class I really have been consistent in investing in myself and my skills, and then also seeing what kind of products I can put out there. Right now, I'm writing 2 books. I'm also launching a course because those are asset classes that would generate income for now and also for the long term. So I'm moving towards that, using my knowledge as an asset class too that will generate income going forward. Now I think the mindset I have is the mindset towards risk you asked. So what's the question? Sorry.
So what kind of mindset of perspective has really helped you to stay focused on your long-term financial goals? So especially when you encounter any market fluctuations.
There's one visual that I always think of each time the market fluctuates. It's the 25-year visual of the SP 500. I don't know if you've seen it. That even if it looks like it's fluctuating now, when you zoom out for 25 years, you see it's still going up. So that has shaped my mindset. Like, you know, just be diversified, be focused. Now is, zoom out. Is a zoomed out mindset, right? Um, and always make sure that whatever you're looking at, always look at the inflation rate, make sure it beats the inflation rate. So that's, I have, I think, quite a low expectation in terms of what it should do, but beat the inflation rate, and anything above that, I'm good. Because at my retirement life, I don't think that I want, it's a life of jetting all around and living a very extravagant. I just want to be comfortable, afford to give, and to also fund projects that I'm passionate about, right? So, but now shifting into this, I think shifting into my 40s, I'm now thinking, bigger, brighter things. So, but it's that mindset to just stay steady, know that you're diversified, zoom out. Just, I wish everyone can see that graphic from 1980 till now. Then you would see that once you choose the right good stock, just leave it. It will do well. And you're
Mhm.
diversified. Yeah.
Exactly. So that's super, very good on kind of putting your own experience, and also when it comes to the mindset and how the mindsets of the long term, so the real benefits of long-term investing and what it looks like most people are so focused on short term, like, oh my god, my portfolio is going down, it's negative, it's that. But when you zoom out, like you mentioned, it's positive on the long term, and people really have to stay focused and committed when it comes to investing on a long-term basis. So now that you've been on this investing journey for a bit, what are some of the key insights or lessons that you've learned about the process?
I think one thing is you need help and there's help available. You need help along the way. Trying to understand everything on your own, it actually wastes your time. Get some help to break things down. Consult financial advisors that you trust. For me, I have a practice of at least once in 5 years. I mean, I do sometimes once in 3 years, once in 5 years, sit down, pay for a session with the financial advisor and spread everything out and just really get their insight to just see if my strategy is up to, if there's any need to change the strategy. Don't stick to, yes, it's good to have a core strategy, but also be open to it flexing or expanding or broadening the strategy, right? Not changing your strategy every year. I think that's different. For a long-term player like myself, it's not every year I change my strategy. I went into crypto, but it was very experimental. I wish I stayed. I bought crypto when it was less than 1,000. I wish I did more. So just have that balance between the high risk, always seek help, and then have a cadence where a place where you can hold yourself accountable. I know now I'm due for a check-in with my financial advisor, because I know I've played I've played around with our plans, and I'm going to set that up. But it puts like a check-in along the way as you go, and as situations change in your life, seasons change, sometimes you migrate, different things happen, sometimes you also have windfalls and you don't know what to do with it. So I think best practice will be every year, if you have if you're able to afford that, if or you can leverage on like your employee assistance program if you have financial advisors there. But if it's a paid thing, I think it's worth it. Every dollar paid, every euro paid to sit with a financial advisor to look at your portfolio and give you advice, I think makes a difference. But someone experienced, someone that is not biased, that is accredited, it makes a difference for me. I endeavor to do it either 3 to 5 years. I do it currently. Yeah.
Super. It's good to hear that you seek advice, because most people try to do everything by themselves. So it's just like saying someone that wants to be a footballer, like they're not a footballer, but they want to be the experts in playing football, right? You can't be. You need to dedicate your time and focus your time on where you have the biggest value coming out of it, right? It's like saying a financial advisor is not going to be a lawyer and understanding everything about law. You might have a bit understanding of it, but when it comes to really get to the nitty-gritty of it, it's really, really important to seek advice. And when it comes to the help of financial advisors, and like you said, it's super important for them to be independent, to be regulated, to be licensed. And this is what we are at Space Up Invest, basically. And also when it comes to really looking at the different circumstances, and you touched upon a very good timeline, like try to do that every year. So this is what we do at Pace Up Invest with our clients. We have a yearly review with our clients that we provide advice to, and also help them with their wealth building and wealth management, because it's totally different. Anything can happen within the year, right? Circumstances might change. And also when it comes to just when it comes to, perhaps like you said, there might be a big windfall coming in, or maybe there might be a big withdrawal from the portfolio as well. And also they can come across competing goals, right? So you might have a goal, but then at some point your goals will start to compete, and also you might not be able to really kind of like understand your future liabilities. So you really need the expertise of a financial advisor. And I always say like people should look for independent financial advisors that are not bound to a certain industry, basically, in the sense that a certain company where they get commission from, because the advice becomes conflicting and they would tend to kind of try and sell products to you. So really look for independent financial advisors. And like you said as well, really, you touched upon a very good point regarding employee benefits, right? So when employers really should help their employees in providing access to independent financial advisors, because yes, they might be expensive to kind of use, but when employers really put this as part of the benefits compensation, right, it really helps on the long term. And also, it also helps the employee, right, because using independent financial advisors on the long term, the impact of the expenses of the cost of making the mistake, it's reduced, right? So really, really important. And thank you for touching up on that aspect, because I think a lot of employers need to listen to this and really help their
Yes,
employees as
yes,
well.
yes, indeed, Rukayat. And there's something I really missed when you asked me in my early journey what helped. I had an investment community and investment club that I joined, which they were always sharing every week, sharing opportunities, and then that kept me, kept it on top of mind because the day-to-day decisions you need to make. Sometimes you don't want investment to be one of it. So getting an email every week saying these are the top investment, or these are the opportunities coming up was really helpful with that. And then being able to join groups where they do syndicates for VCs was actually important. So just a little dollar here, little dollar. It wasn't major, but it started introducing me into the world of investment beyond just stocks. So these are some things that have at least have made me not just an average, knowledge of investment. If I'm not investing a lot more, it's not because I don't know, it's because I don't want to, or I'm a bit distracted. So, as I said, so I wanted to just mention the power of community. Even in Blazers and Baby, where we do a lot of work with women, we had something last year when we spoke about women wealth and our what. It's very important. We are always talking about financial well-being, affecting your mental well-being, determining your future. It's very key for every individual. Women too, who are mostly vulnerable most of the time when they are left economically exposed. So this is very important as part of what we do. So, as the co-founder of Blazers and Baby, we always put financial well-being as a key thing we're always talking about when we talk about the full women, a woman's potential and her well-being.
Super. That's really good. And I think it goes in nicely to what advice would you offer to someone who is currently in the same position you were in before you started investing, right? So perhaps they're feeling curious but don't know where to start and where to begin.
I think the first thing I would say is if you have a friend that I think is doing better, ask. Second thing I would say, their YouTube free videos, follow Pace Up Investment. They have some free webinars you can get on to just get beginner knowledge. There are quite some people, I don't want to call all the other names. There are a lot of nice financial advisors free on YouTube. Start from that point. Then make a choice and make an investment or do an exploratory call. Most financial investors have one exploratory call or one low thing that you just have a short conversation with. If you can't afford to pay anybody, I think with the information on YouTube, ChatGPT, Copilot, you can at least start. Then try to get into a community. That's where people are speaking about it all the time. So it becomes at the top of your mind. And then when you build some money that you can pay a financial investor, advisor, get the advice. And if you are lucky enough for the financial advisor to take execution rights, some of them, if you have some money, I have $500, I have this, I don't know what your minimum is in Pace Up, but some financial advisors are able to take your money and manage your portfolio and take a percentage of it so that all the decision making is out of your hands and is in a competent person that is looking out for you. But you just have to do the due diligence to make sure the person is truly competent and the person is truly looking out for you. Community for me is quite important. But at the end of the day, your financial decision is, and it's really critical for your health and your well-being. Yeah.
Super. I think that is really, really important. Thanks for that. So there are quite a number of information on the web, on YouTube as well, and we also have on PaySap events because there's so many information out there that it becomes a lot of noise. So you can kind of have a direct and kind of how do I say, to take out all the noise, you can come onto our platform at PaySop Invest to kind of really help you on that journey. And you did ask a question about if you can get someone to manage that for you. So we do manage our clients' assets as well. So obviously there's a percentage on that we take on. So anyone that is interested, just exploratory call, like you mentioned, Isioma. So we offer that as well. So basically, I'm going to put that in the link, but also put the amazing work that Isioma is doing with babies, blazers and babies as well. And so one last thing that I would like to really ask is, from your perspective, I mean, what's one of the most valuable things about having guidance as you start your investment journey?
Less losses and being able to just consult when I'm in doubt. Since I started having guidance, I think Rukayat, you've been my global advisor, and then Tommy was my Nigerian advisor. You just know you have someone to just ask quick questions when you are in doubt. And I have experienced less losses overall because, oh my God, I lost some money with Swiss Gold, lost some money. Yeah. So, and sometimes I run away from them because I know I'm spending more than I should spend. And they remind me of my future.
Can imagine. Good. Thanks for that. So yeah, it's really important to have like kind of like a sounding board, like you said, is having like a coach, because everybody needs a kind of a coach. Everybody needs a kind of an advisor to really help you as a guidance on the journey. So it's really good to see that you have two different guidances. So for Pace Up Invest myself for your global portfolio, and someone to me in Nigeria. So, Isioma, thank you so much for sharing your personal experience and insights with us today. And it's incredibly valuable for our listeners to hear directly from someone who has taken those initial steps into the world of investing, which you have done. And I think your journey really demonstrates that becoming an investor is something achievable for everyday individuals with the willingness to learn and take action, right? So I always say that knowledge is power. So thank you, Isioma. So if you're listening and feeling inspired by Isioma's story and are really ready to take your own first steps to investing, remember that getting started is often the most significant hurdle, which Isioma also kind of alluded to at the beginning. But to really help you navigate this process with confidence and clarity, I really invite you to explore the resources and the personalized guidance that we have at Place Up Invest. So we're here to support you on your journey in building a secure financial future. And also, please check out Isioma's work at Blazers and Baby, and she's doing amazing things for women. And join us next time on Money Conversation with Everyday People for more real stories and practical insights on navigating your financial journey. Thank you.
Thank you. Thank you, Rukayat. Thank you.
Super.
Yes.
So,
Yeah.